Right, settle down, the lot of you. Stop looking at your bloody phones and pay attention. I haven't got all day to explain basic arithmetic to you. Welcome to today's briefing. The suits at the big institutional funds, the polished desk jockeys who think they run the world, are playing a very different game right now. If you blindly follow their headlines, you'll be the ones holding the bag, again. So open your eyes. We're looking at the actual numbers for the K market today, not the fairy tales they print in the morning papers. Look at this shambles. The KOSPI is sitting at 7,844, up 2.6%. You're probably thinking, brilliant, time to remortgage the house and go long. Don't be muppets. Look underneath the hood. The KOSDAQ is bleeding out. This isn't a broad recovery, it's a freak show. The Korean market isn't like Wall Street. Over there, you buy the S&P and go to sleep. Here, it's an emerging market in a tailored suit. It's a high-beta, export-driven beast. When global liquidity dries up, the K market is the global ATM. Foreign funds withdraw from here first because it's liquid and heavily cyclical. Right now, this index is being entirely propped up by a few giant semiconductor lads, while the rest of the market is suffocating. Here's where it gets ugly. Look at the macro data. US PPI hit 6%. Oil is at $101. And the won, $14.90 to the dollar. This is the bit where you should be sweating. For a manufacturing-heavy economy that imports all its energy, 1,490 won is a chokehold on corporate margins. The institutional boys know this. That's why the sentiment on the ground is toxic. But the index isn't reflecting it yet. Why? Because the bloody links are broken. Look at Chain A. US futures are up, the dollar is crushing the won, the foreign funds are dumping stock, yet the KOSPI goes up? That's a broken chain. It's a temporary liquidity distortion. And Chain B? Interest rates are climbing, which should crush growth stock valuations. But instead, AI fundamentals are completely ignoring gravity. The market is ignoring the macro reality because it's intoxicated by chips. And here is the drug of choice, semiconductors. Despite the macro storm, we're in the middle of an HBM supercycle. HBM4 orders are booked out for years. This is the unique quirk of the Korean market. Samsung and Hynix make up such an absurdly massive chunk of the index that if they sneeze, the KOSPI catches a cold. Right now, they aren't sneezing. They're on steroids. That's the only reason the index is keeping its head above water. Now, look at this chart before you start crying into your pints. 24 trillion won. That's what the foreign institutions, the first desk types playing with pension money, have dumped over the last 5 days. The financial press will tell you it's the end of days. It's not. Foreign ownership is still sitting at 38%. They aren't abandoning the country. They are rebalancing their portfolios to manage the currency risk at 1490. It's a mechanical adjustment, not a structural panic. Don't let them scare you out of your positions just so they can buy them back cheaper next week. Right, let's get to the actual work so you don't blow up your accounts. We operate on probabilities, not hope. Base case, 60% chance. We stay range-bound. The currency holds at 1490 and we see neutral volume. You sit tight. Bear case, 25%. The won snaps past 1500. The chip sector takes profit, and we drop 1.5%. Bull case? Only 15%. We need a miracle with the exchange rate and foreign net buying to see another leg up, so don't bet the farm on it. If you must press buttons today, do it carefully. SK Hynix. It's the purest play we've got. Support is at 1.95 million. Hyundai Motor. It's not just cars anymore. They've got the robotics angle with Boston Dynamics. LS Electric. AI needs data centers need power, and these lads build the grid. But listen to me, don't just jump in blindly at the open. Wait for the mid-morning noise to settle, around 10:30, after the Chinese markets open and the institutions show their real hand. This is the most important slide, so wake up. I don't care how brilliant you think you are, the market doesn't care either. Position sizing. Keep it under 35% of your total assets. The currency volatility is too high to be fully exposed. Stop loss. 7,720 points on the KOSPI. If it breaks that, you cut. No waiting to see, no it'll bounce back. You cut it. I will not be the one explaining to your families why you lost the lot because you were too proud to take a small loss. We split the entries. A third in the morning, the rest in the afternoon if support holds. That's the layout. The institutions are playing their games with the macro data, but if you stick to the technicals and don't panic when they want you to panic, you'll survive the week. Any questions? If it's about meme stocks, don't bother. Otherwise, let's hear it. And try not to lose your shirts today, yeah? I hate the paperwork.